Have you ever looked at a list of marine insurance policies and just thought, what am I even reading? Well, you are definitely not alone. It's a confusing world for sure. But stick with me because by the end of this quick explainer, you're going to have a really simple, powerful way to make sense of it all. Let's dive in. When you cut through all the jargon, it all boils down to this one simple idea: safeguarding your shipments while they're on the move. That's it. It's a shield, really, that protects your valuable goods from all the unpredictable stuff that can happen out there in the world of global trade. So yeah, the whole game is about safeguarding those shipments. We're talking about protecting the things you sell as they travel across oceans, over continents, and through the sky. Just think about it for a second. Your products are packed in containers, loaded onto massive ships, or put into cargo planes. They're up against rough seas, handling mishaps, theft, you name it. All that movement creates risk. And that risk is exactly why this isn't just some optional extra. It's absolutely essential. Okay, so you get it. You need protection. But that brings us to the real problem and why we're here today, trying to make sense of that long and honestly super confusing list of policies. This is the question, right? This is where so many business owners get stuck. You're trying to do the smart thing, the responsible thing, and ensure your shipment. But then you're hit with this menu of options where everything sounds kind of the same. So how in the world do you choose the right one? And boom, this is what you're up against. At first glance, it's just a wall of text, isn't it? A tangled mess of industry terms. It is not at all clear how any of this actually connects to what your business needs. But don't worry, we are about to bring some serious clarity to this chaos. So our first move is to organize this list using one very, very simple question. How often do you actually ship stuff? Seriously, this one question is going to help us slice this list right in half. That's right, we're going to stop looking at this as one long, messy list. Instead, we're creating logical buckets, starting with the policies that are built around how frequent your shipping schedule is. So first up is the most straightforward of the bunch, the specific policy. The best way to think of this is like a single-use ticket for a bus or train. It's designed for one specific shipment going from point A to point B. It's perfect if you ship infrequently. Maybe you're an art gallery sending a sculpture overseas just this one time. Now, on the complete other end of the spectrum, you've got the open policy. If the specific policy was a single ticket, this one's your annual travel pass. It's made for businesses that are shipping stuff all the time, like a busy e-commerce store. You set it up once, and it automatically covers every single shipment you make for the whole year. You don't have to think about it every time. So when you put them side by side like this, the difference is crystal clear, isn't it? On one side, you've got a policy for a single journey. On the other, you have continuous coverage for an ongoing loop of shipments. The choice really just comes down to whether your shipping need is a one-time thing or a constant part of your business. And then there's the big one, the sales turnover policy, or STOP. This is kind of the all-in-one option. It's this massive, comprehensive policy that covers everything. Shipments within the country, imports, exports, the whole shebang, all bundled together and based on your company's total sales. It just simplifies everything down to one policy. Okay, so we've covered the policies based on how often you ship. But what about what you're shipping? What about the unique financial risks that come with it? That brings us to our second category, policies designed to protect you from those specific worries that might just keep you up at night. I mean, getting coverage for basic damage is one thing, but what if the market value of your goods suddenly doubles while they're on a ship? Or what if you've paid thousands in customs duty on a shipment that then gets completely destroyed? These are really specific financial risks, and they need specialized protection. So first, let's talk about the duty insurance policy. Okay, picture this. You've just paid a ton of money in customs duties for a big shipment coming in. But before your goods can even leave the warehouse, there's a fire or a flood, and they're gone. This policy is designed to give you that duty money back, protecting you from a major financial blow. You know how markets can be completely unpredictable, right? So let's say you import something like coffee beans, and while your shipment is at sea, the global price just skyrockets. If that ship sinks, a standard policy will only pay you what the beans were worth when they left port. Well, this increased value policy is designed to cover that gap, protecting the profit you stood to make. And finally, we have the delay in startup policy, or DSU. And this one is a really, really big deal for large-scale projects. Imagine you're building a huge new factory and a critical custom-made piece of machinery gets damaged on its way to you.
Your entire multi-million-dollar project could grind to a halt for months, losing you massive amounts of money. A DSU policy covers those kinds of financial losses that happen because of the delay.
All right, let's pull all of this together. We started with what felt like a random, confusing list, but now we've actually built a clear, logical framework to understand it. We've figured out how to choose your shield. And that's really the main takeaway here. That list wasn't so random after all, was it? It's a well-designed toolkit broken down into two distinct categories, and each one is meant to solve a very different kind of business problem.
And here it is, all that clarity on one slide. Up top, you've got your frequency-based policies. You choose these based on your shipping schedule. And down below, you have your risk-based policies, which protect you from specific financial nightmares. This table right here is what turns all that confusion into confidence.
So this is the mental model you can carry with you. From now on, when you see a list of policies, you can immediately start sorting them by asking just two simple questions. 1, how often am I shipping? And 2, what are the specific financial risks my business is facing?
So I'll just leave you with this thought. Now that you have this framework, think about your own business. What is the one shipping risk that you absolutely cannot afford to ignore? Is it a project-killing delay, losing a huge chunk of change on customs fees, or is it just the day-to-day risk on your regular shipments? Knowing the answer to that is the real key to choosing the right shield.